Hi, we're back. We're going to be looking at XLI. XLI, they're a spider index, SPDR, spider index, and they focus on consumer discretionary items. So that's the market. And if we just look at the top 10 holdings, so clearly not as diversified as some of the other indexes we have. The top 10 holdings make up roughly 71% of this index, and these are the top 10. So Amazon is a clear winner in this one, making up 23%. This one's a little bit surprising to me to see Tesla, but Tesla is making up 15% of this one right now. So it kind of makes sense that we're going to see some drops here in the market considering how much of a holding they have in it. But outside of that, pretty spread out in what they kind of hold. So Amazon, that's like everything. I believe this is Burger King. So restaurants, Lowe's, McDonald's, Nike, Starbucks, Target, Home Depot, TJ Maxx. Very diversified, but you can see it's all consumer type items. I'm kind of curious to see if Tesla changes over the next year or next quarter even. But that gives us a nice breakdown. And again, these top 10 make up roughly 71%. It looks like the bottom is less than 3, and we can just see that in the chart. Burger King has less than 3, Target's less than 3, TJ Maxx is less than 3. So whatever else is in this fund, it's very small proportionally, but that just gives us an idea of what's in this segment. And so here we have the quarterly chart, and right away you can see just massive shifts in the consumer discretionary. Most notably, from 2020 to about mid 2022, it really just accelerated after that crash in like March of 2020. Uh, it just was off like a rocket, and then right around 2022, the beginning of 2022, it just fell off a cliff and got back into what I think is going to be the fair value range. So what we've been doing, especially with index funds such as this one is clearly in an uptrend. Even with this crazy uh, rise and fall, if we kind of stretch this one out, try to catch most of the bottoms here, and we'll make this purple because that's kind of like our traditional trend lines. And we'll draw in the top trend line, try to capture as much as we can with that. This one will be slightly skewed, of course, but we'll try to catch as much as we can. So that seems to be the trend. Clearly it's in an upward trend, so I do like this one right away. It's just, should we wait? So let's kind of zoom in to the past 3 years, and you can see we're still in that fair value range now, or that we're back in that upward trend range now. And so if we just start drawing in a couple other lines just to see what the high and low of this one is, and we're going to make this a black line for us. I'm using this as the new low because, again, I just, if I can, I want to avoid using the crash in March of 22, or the March of 2020, just because I feel like um, it's just not the right thing to use. So it looks like the newest low is 128. It looks like it went down there, bounced right back up. This one's not. It's fairly close, I guess, at 135 roughly. We could say that was kind of like a test that it could come back down, and then it seems like that is the new low point is 128. If we add in what is the max for this one, seems to be about 210, which again, based on the trend lines that we have in purple, that was clearly way overvalued. But the thing is, it was locked in this uptrend, and it continued to rise, and so a lot of money could have been made during that rise, And then, depending on your timing, you could have made a lot as it came right back down into the fair value range. So if we look at, we'll add in another line here, just try to find what looks like another kind of a fair value, like a buy point really. I'm going to choose this line right here, mainly because if we go back to the earlier part of this 3-year chart, we had some support here in late third quarter, early fourth quarter 2020. And then again, it did act like support in like mid 22. It did dip slightly below, but came right back. It tested again in like October, November of 22, did dip below slightly, but came right back. And then, of course, most recently in December of 22 and even into January, it actually broke that support line, but within a month, it was back above it, and now we're in that range. So very close to our buy price point. If we were to draw in a just another line that appears to be like a fair value type, it looks like right around here we could add as like there was some support here in early 21, again in about third quarter 22. Of course, it didn't last that long. This one definitely, it held up for like 9 months roughly, maybe even a year. And now it seems to be kind of acting as a resistance line in the most recent period. So I think there's a good probability that we could actually catch this one close to 137. So I might hold on this one. I think it's at a decent price overall. And then of course, ideally we would like it to come all the way back to the bottom of the purple. So what I would consider doing is um, I'm probably going to wait on this one to pull back to close to 137, preferably even like 128. But I'd probably at least start to add at around 137. If it drops lower and I have the funds to do so, I might dollar cost average in, add another share or two as it drops lower. And thinking, of course, that if it hits 128, that probably is going to be the low. And then, of course, worst case scenario, in my opinion, would be if it actually broke through 128 again, uh, which actually it hasn't happened. Um, Once it passed 128, it has not gone below. But if it were to, I think realistically, what could happen is it might drop down to like 111. That's in the realm of reasonableness that I'm seeing here. But I think most realistically, 128 would be like an ultimate time to actually buy and add this stock. I think 137 is a decent price. And even right now is pretty good price because it's below what I would consider the fair value. And it's very close to that buy point that I marked out in green. In terms of like a sell point, and I'll make this one a red line for us, it looks like what's most common, mm, somewhere close to like 178. I feel like I could draw it in here. If I drew it in at 171, it's because I'd be basing it off of early 21 and also mid 22. If I drew it up higher, we have more or less 3 points. I would count this like the fourth month of 21, again the seventh and ninth month of 21. It acted as resistance. It broke above that, and then it tried to get back above in February of 22, again in the fourth month of 22. I think this is more common, but also it seems to be kind of downward trending. I think if we look again for like a trend, there doesn't really seem to be an upward trend or a downward trend. I kind of wanted to see if that would be the case, and I was just basing it off these two low points that we had. We made lower low here, But because this one went up so high, I mean, we are seeing lower highs. I will say that. So maybe if we draw in one more line, a trend line, we are seeing lower lows. And this is, I'm trying to capture as much as I can. Let me maybe just grab the green point, and if we kind of catch, that's pretty spot on with most things, especially if you include the tails of some of these stocks. So if we make this line like an orange, it does seem to be trending lower. And so because of that, I definitely think it's likely that we'll see 137 again in the next probably couple weeks, if not this week. I think that's also another reason why I'd probably wait a little bit on this one, but it is close. It's close to a purchase. So I'm just going to update my spreadsheet here just so we can kind of get a better sense of what's going on. Sell point 181. I think overall it clearly is trending downwards in terms of its peaks. And so keeping that in mind, it looks like we'll hit like possibly 138, which would be like a couple weeks or actually a couple months out. I do like that gold line. We'll kind of see how this one tracks. I guess just to kind of wrap it up at this point, and again, if you have a different opinion on this one, please share it in the comments below. Let me know what you think, and just like the consumer discretionary market as a whole, it doesn't necessarily have to be XLY. I would be curious to hear what you think. But right now, I think it is most likely going to continue to fall based on what I'm seeing. If it were to climb above not only the gold line, but then even our fair value line at 154, I think that's when we might start. Well, we would take out the gold line because it would be out of our trending downward phase. I guess if I were to even draw in a second trend line trying to catch most of the bottoms, I feel like that's a bad spot, but like, because here, I mean, this clearly catches this one, but then we're also seeing something like this, which is more parallel to the other line. So I'm actually going to just take this one out, and you can see it's gone to a very good price point, but again, because it's at a downtrend, this is it's definitely possible that it could keep trending downwards, hitting new lows more recently. And if I draw in one more line just to kind of see, I think we'll reach an impasse around in the 120. It's possible this one could fall all the way back down to like the 120s. That would be a great time to purchase. I think just for my purposes today, 137 would be ideal, with the understanding that it's very probable that it will continue to go downwards. So we'll kind of leave this. It's kind of messy as I look at it, but hopefully I can piece this puzzle together when I take a second look in a couple weeks or maybe a month down the road, and kind of make sense of this all. But for now, that's how I see it. So consumer discretionary, we just added that in here. It's at 143. It is definitely closer to the buy point than the sell point, but because of it being in a downward trend currently, I'm not running out the door to get this one today. I'm firmly locked in that I'm going to wait for this one to pull back to 137 at least before going into it. And so, yeah, that's how I'm seeing it right now. Let me know your thoughts in the comments below, and otherwise, please like, subscribe, and I will see you on the next one. Bye.